Hello, my dear friends. Welcome to Hari Seva IBBI Valuation Cracker. My name is Rajesh Wadhwani. Today we are starting second chapter, Income Approach. First chapter we have completed Valuation of Real Estate of 7 sessions. In all the 7 sessions, notes and MCQ are ready. If you want PDF copy of Valuation of Real Estate, please mail to me Rajesh Hari Seva @gmail.com. Now let us start second chapter, Income Approach. Income Approach chapter divided in 6 sessions. In first session, we will learn relation between income and value, capitalization and rate of capitalization, year purchase, sinking fund, redemption of capital, reversionary value, derivation of yield rate, and remunerative rate of interest, accumulative rate of interest, and type of rent. So let us start session 1. Basic knowledge of the approach to valuation. In property valuation, there are 3 main approaches commonly used based on key economic principles like price equilibrium, anticipation of benefit, and substitution. On this principle, 3 approaches is decided. First is income approach, second is market approach, third is cost approach. In real estate, property can be divided in 2 parts, marketable property and non-marketable property. Marketable property can again divided 2 parts, income facing properties, non-income facing. Here, income facing we are getting rent, other income from the property, and non-income fetching, no rent, you will get it. Income approach again divided rented house, office, commercial, and lease units. Market approach again divided private house or flats, owner occupied house, flat or vacant land. Third, non-marketable property, we do valuation with cost approach. That's our school, temple, hospital, and government building that are non-marketable properties. Now move. Marketable property are those that can be easily bought or sold in the market. That is called a marketable property. Income facing property are generate income and are valued using the income approach, which consider the future income the property value produce. In income fetching, generate income continuously. So with the help of income, how much income is generating, we do the valuation of the house or flat or land. Non-income facing property do not generate regular income but are valued using the market approach, which is based on the comparing the sale price of similar properties. Non-marketable properties are difficult to sell or exchange due to their specialized nature, so they are valued using the cost approach. This focus on the cost of cost of construction and replacing the property, especially when no comparable market data is available. This approach are selected based on the circumstances and the nature of property being valued. The income approach is particularly useful for income producing properties. Before starting income approach, first we will learn what is the subject matter of valuation, that is interest in the property. The subject of valuation is not the physical asset of the property, such as brick, cement, stone, and land. Valuation not a physical quantity calculation, how much cubic meter brickwork done, how much cubic meter concrete done, how many cement bags used, woodwork done. That is called a estimation. That is a different branch. Valuation is a different. Valuation is the interest in the property which refer to legal rights to derive benefit from the property through its lawful use. Value comes from the property's utility or usefulness based on the anticipated benefit that arise from owning and using the property. From this one paragraph, one number MCQ is coming so many times in IBBI examination. For example, the value of a rental property comes from the right to collect rent. The benefit that arise from the property could be current, future, or potential income based on future conditions. In this approach, the right to drive income or benefit from the property is the key factor in determining its value. In income approach, determining the value, we this is the key concept, right to drive income or benefit from the property. This is the main key concept. From whatever income is coming from that, accordingly that income we are deciding the value of the house. Not a you have purchased a flat 3 crore 2 crore, from that cost is not related to the income approach. Income approach, whatever income is generating from the house, from that income, multiplying with the capitalization rate, then capital value is derived. Just Justice Hadley further defined the value as an estimate of the price as it ought to be. This is also important line. MCQ is coming from this line only. They put the blank space and ask what is price. Value is highly subjective depending on factors such as needs of the buyer or seller. The value of asset is influenced by the physical, geographic, economic, and legal characteristic, as well as market demand and supply condition. The value depends on all these characteristics. Key elements of the income approach. First is investment theory. The income approach value the property based on income it generated. The method evaluates the right to drive income from the property such as rental income. The primary value lie in the income stream, not in the physical material. With the whatever rent is coming from that rent, we are driving the value of the house. Market reflection. This approach mirror to market behavior by focusing on the income potential of the property by calculating how much an owner could earn from renting out of the property. The valuation reflect what the market would be willing to pay for that income stream. And relationship between income and value. Income and value relationship. The key idea is that income and value are closely connected. The value of property is determined by its net operating income divided by capitalization rate. The cap rate reflect the expected return on investment and market condition. This is the value. Net operating income, capitalization rate. Here, net operating income always annual income is taken, not a monthly income. And net operating income means minus outgoing. Uh, Whatever expenses going, maintenance cost and other cost, municipality tax, that will be deducted from rent amount. We will get the net operating income. We will learn outgoing in next session 2. So we can write capitalized value equal to net annual income into YP. The year purchase factor represents how long the income is expected to last, considering market interest rate and the condition of the property. What is the capitalization process? The property future income is converted into its present value. Capitalization process is the property future income converted into the present value through the capitalization process. This process uses the cap rate to reflect the risk and return expected in the market. Conclusion. The income approach to the valuation is ideal for income generating property, such as rental building and commercial real estate. It focuses on the property ability to generate income using a capitalization rate to determine the capitalized value. This method value of interest in the property, which is the right to earn income from its use, making a reliable approach for assessing property based on their income potential. Following terms are fundamental in the income approach to valuation, especially for calculating the capital value of income generating property by converting future income into present value. What we are doing in income approach, converting future income into present value while using various rate and formula. So first we have to learn different type of definition. Once your fundamental will clear for the definition, then we will learn how many type of land, rent and leases, and after that we will start income approach. Income approach is again divided in 3 methods. We will learn one by one. First definition, capitalization. Capitalization is the process of converting future income into present capital value. It estimates the value of an asset based on the income it generates. In property valuation, capitalization is employed to determine the capital value by applying a capitalization rate to net income. Capital value, how we will calculate? Capitalization rate multiplied by net income, we will get the capital value. Key points. Essential for assessing the value of income generating properties. Helps investor make informed decision about the property investment. If a investor know कि he will get this much rent, so he can decide he has to buy the property for investment point of view or not. Second term is rate of capitalization. The rate of capitalization is the expected rate of return or yield on investment. It is the percentage rate used to convert future income into present value. It is the percentage rate used to convert future income into present value. Formula: capital value is equal to net income into rate of capitalization. A higher rate of capitalization reduces their capital value, while a lower rate of capitalization increases it. Third definition is remunerative rate of interest. The remunerative rate of interest reflects the return of an investment and is often referred to as the capitalization rate. It represents the income generated by the property as a percentage of capital invested. Its uses It is used to determine the profitability of income generating property such as rental property over a long term. Key points applied to property with the long term or perpetual incomes typically range from 8 to 9%. Helps evaluate the return an investor expect from the capital invested. From this rate of return, investor can decide to he has to buy the flat or house for rented for the investment point or not. Accumulative rate of interest. Same is also called recoupment or redemption of capital. All three terms are same. So do not confuse in case studies income approach. Sometimes he write accumulative rate of interest, sometimes recoupment, sometimes write redemption of the capital. The accumulative rate of interest is the rate at which an investor recoup the initial capital invested in an asset over useful life. It ensures that the capital is fully returned by the time of asset income stage. This accumulated rate of interest, say if investor invested a flat for 50 lakhs rupees. A flat life is 40 years. Up to 40 years, he will earn the interest. He will earn the rent. After expiry of life, he will not get the further interest. So, in 40 years, he will put some money set aside. With that money, whatever interest rate he is calculating and what interest he will get it, that is interest is called a accumulated rate of interest. This is applicable only terminable income when income will cease. It ensures that the capital is fully returned by the time the asset income cease. Applied to asset with a limited lifespan such as short-term lease, 30 years, 40 years, or buildings to recover the capital invested through reinvestment income. Key point. Ensure capital is recouped over a defined period. Commonly used for asset with terminable income such as lease or short-lived buildings. Typically range between 3 to 4%. This is the interest we are using in the sinking fund, so we know how much money set aside annually. Fifth, sinking fund. Already we have learned in valuation of real estate. Here we are going again definition. A sinking fund is a reserve created by making regular payments which are invested to accumulate a specific amount over time to replace an asset or repay a debt at the end of its life. used in valuation to accumulate funds for asset replacement or debt repayment over a fixed period. Key points: regular contribution grow with the interest, ensuring the future sum is adequate for the liability. Applied when asset like building need to be replaced or recouped. My building life 40 years, 50 years. If perpetual income is there, then no need to apply, no need to put fund set aside. Commonly linked to the accumulated rate of interest as the fund grow over time through compounding. Now next, rate of reversion, also called deferment. The rate is used to calculate the present value of future lump sum, such as reversionary interest in property. It represents the investor required rate of return for future income. Applied when the income or value of asset is expected at a future date, such as at the end of the lease. That is called a rate of reversion. After lease is ending, you are getting property value. At that time, future value is 30 lakhs. After 20 years, 25 years, what is the present value? That is called rate of reversion. That is deferment amount. This rate is used to calculate the present value of future lump sum. That is the rate of reversion. Next, annuity. An annuity refers to a series of equal payments made at regular interval over a set period. In a property valuation, it represents the periodic income generated by the property, used to calculate the present value of future income flow over a specified period. Annuity equal time period. Say every year you are putting some amount, you are getting some amount, whatever amount of that year of equal installment, you are getting number of years, that is called a annuity. Next, reversionary value. The reversionary value is the value of asset at a future date when the income arrangements such as lease expire. It is the value at which the property revert back to the owner. Common in lease property where the valuer need to estimate the future value after the lease period ends. Next, yield. Yield referred to the earning generated and realized of an investment over a specified period expressed as percentage of invested amount. Now, derivation of yield rate. Uh, Supreme Court has given one decision in Saurabh Talati versus Joseph McCabe in 1949. Bombay Court set valuation principle of standard rate under the Bombay Rent Control Act. This is our case law. We will study this also in case law, what Supreme Court has told, how you will drive the yield rate. Whenever any investor invests in the house, he wants some return more than the bank, more than the fixed deposit. So whatever he is getting the rent, that is the called yield. मैं आपको हिंदी यूजर्स के लिए एक्सप्लेन करना चाहता हूँ कि सुप्रीम कोर्ट ने एक डिसीजन दिया था यील्ड डिसाइड करने के लिए. उसमें क्या था डिसीजन में कि यदि आपके पास लैंड है, आप लैंड का रेंट इस हिसाब से डिसाइड कर सकते हैं कि आपको मार्केट में जो गवर्नमेंट सिक्योरिटीज एंड बॉन्ड या गिल्ड्स हैं, उसका जो आपको मार्केट में रेट मिल रहा है उससे 1.5% हायर रखा जा सकता है। यदि बिल्डिंग में इन्वेस्टमेंट किया है तो 2.5% आप ज्यादा एक्सपेक्ट कर सकते हैं यील्ड। यदि लीज होल्ड प्रॉपर्टी है, तो यदि तो सिर्फ लैंड है लीज होल्ड प्रॉपर्टी, तो 1% एक्स्ट्रा इसके ऊपर रख सकते हैं, 1.5 प्लस 1। यदि बिल्डिंग लीज पे दिया हुआ है तो आप 1 प्लस 2.5% additional ले सकते हैं। An additional 1% yield is added for leasehold property to compensate for their limited tenure and increased lease. तो लीजल प्रॉपर्टी आपको 5 इयर्स का रहेगा, 10-20 इयर्स का होगा। उसके बाद में कंपलसरी नहीं है कि आपको इमीडिएटली टेनेंट मिल जाए, तो इसलिए 1% एक्स्ट्रा रखा जाता है। This is the called yield. How to drive derivation of yield rates is by as per government, as per Supreme Court decision. Key points: the derivation of yield rate incorporated risk adjustment based on the type of investment. Yield rates help investor compare potential return against safer option, guiding investment decision. तो yield rate से investor इन्वेस्टमेंट का डिसीजन ले सकता है। Year purchase. Year purchase already we learned in valuation of real estate, but this is very important. We we are going through definition again. Year purchase referred to the capitalized value required to be paid once and for all to receive an annual income of P1 for a specified period of time at a specified rate of return. It is key concept used in asset valuation, particularly for income generating property. Capital value is equal to net income into year purchase. So how many type of year purchase? There are three type of year purchase. One is perpetual year purchase, second single rate year purchase, third in dual rate. If perpetual year purchase, we have learned YP is equal to 1 divided by R. Single year purchase, YP 1 minus PV divided by R. PV is the present value. Present value we know, present value is equal to present value equal to 1 1 plus R bracket close power n. If you put this present value here, then you will get a YP single rate. Dual year purchase. Dual year purchase we have learned 1 divided by R plus S. R is rate of return, S is the sinking fund. You know how to calculate the sinking fund. Sinking fund is calculated as is equal to R 1 plus R bracket close n minus 1. So you can calculate it putting sinking fund factor here, you can get the YP dual rate. Before diving into detailed study for the income approach, some more definition we have to learn here. First, we are going to rent, type of rents, ground rent. The rent charged by the landowner lesser to the tenant for using the land. It can be fixed for the entire lease period, increased at set interval, or to be reviewed during lease renewal. Ground rent. Ground rent is lesser charging to lessee. He has given lease for 30 years, 40 years. Uh, in that lease, some terms and condition will be there. It rent can be increased after 2 years, 3 years. It may be given percentage 2%, 5%, 10%, or after 5 years is to be decided. That depend on the condition. The ground rent definition is the rent charged by the landowner to the tenant for using the land, for only using of the land, that is called ground land. In type of rent, one MCQ is coming in must. Sometime two MCQ can come, but one will come must. Rack rent, the full rental value, also known as gross rent, that the property gets generated annually. This may cover rent for the land, building, and both. Land, building, both rent is called a rack rent. Mutual rent, the total rental value the lessor receive from a lessee. This includes gross rent plus the notional rental value of any premium to receive upfront at the start of the lease. म्यूचुअल रेंट में क्या हो सकता है कि आपको ने रेंट फिक्स करते टाइम पहले कुछ एडवांस ले लिया हो, प्रीमियम ले ली हो, 5 लाख या 10 लाख ले लिए आपने प्रीमियम, आपके पास सिक्योरिटी डिपॉजिट की तरह वो जमा हो गया, तो आपको रेंट में कुछ कंसेशन करना पड़ता है जिससे आप रेंट कम लेते हैं, क्योंकि आपके पास में 10 लाख रुपए या 5 लाख रुपए डिपॉजिट जमा है, वो आप बैंक में रख के इंटरेस्ट कमा सकते हो, तो उसके हिसाब से आप मार्केट से वो कम रेंट लेते हो क्योंकि आपके पास में प्रीमियम है, सिक्योरिटी डिपॉजिट है, तो दैट इज कॉल्ड म्यूचुअल रेंट. A total rental value the lessor receive from a lessee. This includes gross rent plus the notional rental value of any premium received upfront at the start of the lease. Head rent, the rent paid by the main lessee to the original owner or lessor. जो मेन लेसी होगा आपका हाउस, ये इस हिसाब से डिवाइड हो सकता है. हियर लेसर है, लेसर ने दिया लीज लेसी को, लेसी ने अगेन लीज दिया अब लेसी को. दे रेंट, जो जो ये लेसर जो कहलाएगा, जो सबके ऊपर है, उसको जो रेंट मिलेगा वो हेड रेंट कहलाएगा. प्रॉफिट रेंट, द एक्स्ट्रा रेंट रिसीव्ड बाय a head lessee when subleasing the property for more than the rent they pay. The difference between the rent paid and the rent received is called a profit rent. I will explain you. Okay. First, we go the definition of improvement rent. Profit rent क्या है, तो एक्स्ट्रा रेंट रिसीव हुआ, लेसी ने लेसर से रेंट लिया, लेसी लेसर को रेंट देता है। अब जो ये लेसी है वो है हेड लेसी हो गया। हेड लेसी उस मकान में इम्प्रूवमेंट करके और कुछ सब लेसी से रेंट लेता है। वो सब लेसी से जो रेंट लिया जाता है वो जो है हेड रेंट वो पे कर रहा है उससे ज्यादा रहता है। तो ये जो डिफरेंट है वो प्रॉफिट रेंट कहलाता है। द एक्स्ट्रा रेंट रिसीव्ड बाय हेड लेसी व्हेन सबलीजिंग ए प्रॉपर्टी फॉर मोर देन द रेंट दे पे, द डिफरेंस बिटवीन रेंट पेड एंड रेंट रिसीव्ड इज कॉल्ड अ प्रॉफिट रेंट। एक्चुअल में लेसी का जो लेंस हुआ वो प्रॉफिट रेंट कहलाएगा। लेसी ने रेंट लिया, उसमें से एज पर एग्रीमेंट के हिसाब से उसने लेसर को रेंट दे दिया, बाकी जो बैलेंस बचा वो उसका प्रॉफिट रेंट कहलाएगा। थर्ड है इम्प्रूवमेंट रेंट। When a property is subleased after improvement, additional rent charged due to this improvement is called improvement rent. लेसी जो सब लेसी से रेंट रिसीव कर रहा है वो इम्प्रूवमेंट रेंट है। हेड लेसी जो सब लेसी से रेंट ले रहा है वो इम्प्रूवमेंट रेंट है। दिस all three are very important: profit rent and improvement rent. One mark MCQ came in my exam. Also, one 12 marks case study came in exam. Only in out of 12 marks, 4 marks only to find out the profit rent and improvement rent. This is only plus and minus. If you take care and learn it, then it's easy to answer it. मैं आपको एक एग्जांपल के साथ में एक्सप्लेन करता हूँ। लेसर द ओरिजिनल ऑनर ऑफ द प्रॉपर्टी, जो लेसर है ओरिजिनल ऑनर ऑफ द प्रॉपर्टी है, वो सबका हेड है। वो उसको क्या कहते हैं, जो रेंट रिसीव करता है वो हेड रेंट कहलाता है। हेड रेंट द 50,000 पेड बाय द हेड लेसी टू द लेसर। सपोज करो ये 50,000 हेड लेसी लेसर को दे रहा है, तो ये 50,000 हेड रेंट हो जाएगा। जो लेसी है उसने मकान सबलीज कर दिया, प्रॉपर्टी सबलीज कर दी, तो वो हेड लेसी हो जाएगा। द मेन लेसी हु पेड देयर हेड रेंट एंड सबलीज द प्रॉपर्टी, जो हेड रेंट देता है और प्रॉपर्टी को सबलीज करता है वो हेड लेसी कहलाएगा। मैं आपको हिंदी में एक्सप्लेन इसलिए कर रहा हूं कि आई गॉट 2-3 मेल्स एंड कमेंट्स, they want to learn in Hindi. So whatever difficult जहाँ पर problem है, that only I will explain in Hindi. Otherwise, I will go all this chapters in English only. Wherever required, in my view, Hindi is required, I will explain in Hindi also. Otherwise, very simple English. Improvement rent. The additional rent charge 75,000 due to enhancement made to property, रिफ्लेक्टिंग द इंक्रीज वैल्यू ऑफ डिजायरेबिलिटी। अब हेड लेसी ने सब लीज किया मकान, तो वो 50,000 का 50,000 में देगा नहीं, तो उसको कोई फायदा नहीं हुआ। ही हैज गिवन दैट प्रॉपर्टी इन 75,000। जो 75,000 में से यदि 50,000 ही विल पे टू लेसर, जो बैलेंस बचेगा हेड लेसी को 25,000, वो प्रॉफिट रेंट कहलाएगा। Profit rent. The profit rent of 25,000 is the difference between the sub-lessee rent 75,000 and head rent 50,000. Improvement rent, profit rent are important. In my examination, one MCQ came for the definition of improvement rent. Also, 112 marks case study came. In that case study, 4 marks, two question was what is the improvement rent and what is the profit rent. To understand easily, do not confuse and try 3 4 examples. So it is very easy to remember to you. Otherwise, at the time of examination, you will confuse what is the profit rent, what is improved rent. Contractual rent. The rent agreed between the lessor and lessee as per the lease contract. It can be written or verbal. Whatever rent is finalized in the contract, that is called the contractual rent. Very simple. Standard rent. Rent fixed by the court as per Rent Control Act. Court will fix the rent and house owner will take the rent accordingly. That is called a standard rent. Rent fixed by the court under the provision of the Rent Control Act, typically for protecting tenant from the excessive rent increase. We will learn Rent Control Act also. Market rent. The highest rent a property can generate in the open market, considering all advantage and disadvantage of the property and the market condition. Concessional rent, rent that is much lower than the market rent, typically charged when the property is rented to friend or relative as a token or nominal rent. आप अपने ब्रदर को मकान रेंट पे दे रहे हो या किसी फ्रेंड को दे रहे हो तो मार्केट रेंट से काफी कम रेंट लेंगे उनसे. That is called a concessional rent. Monopoly rent. This is the rent charged for property that has a unique location advantage, allowing the landlord to demand a rate higher than normal market rate for a similar property in the area. This is a monopoly rent. यदि कोई प्रॉपर्टी यूनिक लोकेशन पे है, उसका व्यू अच्छा है, तो जो ओनर होगा वो अपने मन मुताबिक रेंट लेगा. That is called a monopoly rent. So my dear friends, today our session all point is covered as per session 1. In session 2 we will further learn some more definition, and that is lease and lease, lessor and lessee, type of lease, valuation of lesser interest, outgoing, valuation property affected by Rent Control Act, Easement Act, and Transfer of Property Act, and determination of market rent and standard rent. We will learn in session 2. Thank you. Thanks. Before leaving the class, again requesting you kindly subscribe the channel, hit the notification bell so you will get the notification